Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
Stocks are your ex. Crypto is the side piece you actually marry. Verdict: US stocks are quietly turning into the bond market, and crypto is stealing the only thing that ever made equities worth the headache: upside. S&P 500 today, 739, down 1.2% on the day, but that's not the important number. The important number is the implied earnings yield, about 4.2% when you flip that PE over, while you can grab treasuries just sitting there paying around 4.5 to 5% with zero earnings calls, zero clown CEOs on CNBC. Nvidia down 4% today isn't about profit taking, it's about a market that already prepaid years of future growth and is suddenly realizing there's an actual alternative. A stock trading at a fat multiple only works when investors are starved for yield. Once bonds pay real money again, every overhyped growth chart starts looking like a bad Tinder date in daylight. Now line that up against crypto. While stocks bled red today, total crypto market cap barely flinched, and Bitcoin's realized volatility has been quietly grinding lower over the last couple years, even as its liquidity deepens. That's not a casino getting crazier. That's a new asset class aging out of its teenage years, while US equities morph into overpriced annuities. Here's where this gets uncomfortable. US stocks trade like expensive, taxed bonds with marketing, while Bitcoin is turning into a 24/7 global, programmable collateral layer that Wall Street pretends is still a meme. You're told to stay the course in indexes that now yield less than your government's IOUs, while the only thing in markets actually acting like a growth asset is the thing your financial advisor jokes about. And here's the cliff. In the same week, the Pentagon pulls back a troop deployment, and Trump and Xi agree the Strait of Hormuz must remain open. The market still prices US stocks as if geopolitical risk never touches your index fund, but Bitcoin instantly reprices every tiny headline about global friction. One asset lives in reality. The other lives in a brochure. The truth you never get told: US stocks no longer pay you growth for the risk you're taking. They pay you a bond yield, taxed higher, chained to management teams you didn't pick, and systemic risks you don't control. Crypto, especially large cap, liquid names like Bitcoin and Ethereum, now behaves like high volatility tech beta with a structural kicker: fixed supply, global 24/7 liquidity, and zero CEO capable of detonating your investment with one drunk email. Here's the mechanism. When risk-free rates were 0%, equities were forced to carry the whole return universe on their back.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Every pension, every robo-advisor, every 60-40 zombie shoved money into stocks because there was literally nowhere else to go. That's how PEs got stretched. That's how Nvidia ended up priced like it manufactures oxygen, not chips. Now that bonds actually pay you, the marginal dollar doesn't need to overpay for earnings. It just sits in treasuries and collects. So equities lose their monopoly on yield. At the same time, the marginal risk dollar, the money hunting real upside instead of safe income, looks around and finds crypto, a liquid, 24/7 global sandbox where you don't wait for Fed pressers or quarterly calls. Crypto becomes where you rent risk. Stocks become where you rent income. You've been taught the opposite: stocks for growth, crypto for gambling. That was true when Bitcoin was a $20 billion science project and the 10-year paid 1%. In 2026, the script is flipped. US stocks are behaving like overpriced income products, and large-cap crypto is functioning as the aggressive growth sleeve institutions quietly backtest while they publicly trash it. So what do you do with this? This is not financial advice, but here is the truth. If you treat your US stock exposure as sacrosanct growth while ignoring crypto, you're running a 2010 playbook in a 2026 market. Stocks now compete with treasuries. Crypto competes with your alpha. 3 things I'd do if I were you. 1. Audit your portfolio like a savage. Write down your S&P or total market exposure and ask, Would I still hold this if I admitted it's basically a dressed-up bond fund with higher taxes and more headlines? If the answer is no, stop lying to yourself about why it's there. 2. Define a strict small risk bucket, money you're genuinely willing to light on fire, and allocate a slice of that to large-cap crypto instead of chasing story stocks. Not YOLO options, not microcaps. Bitcoin and maybe Ethereum as your high volatility growth sleeve, rebalanced on a fixed schedule like a robot, not a degenerate. 3. Reframe how you think about returns. Bonds for income, stocks for modest, taxed growth, crypto for asymmetric upside. If you pretend stocks still do all three, you get none of them. If you assign each role to the asset actually built for it, you stop being the exit liquidity for everyone who already figured this out. The market already made the decision. US stocks are what your dad thinks crypto is, risk with no real payoff. Crypto is what your advisor pretends stocks still are. Actual upside, priced by reality, not by brochure. You choose whether you want the brochure or the return. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.